The Federal Reserve, they're going to meet in 1 day. Yeah, 1 day from now. We're going to have a live event. I'm going to have it live actually at about an hour after they announce. And here's why. The Federal Reserve is going to come out and they're going to announce there's a 99 point something. I'll show you that here in a little bit. Chance they're not going to do anything at this meeting. But we really want to focus in on what they tell us after that, when they have the median coffers. So I'm going to show you after the fact what happens with rates at that point. So here's what kind of the expectations are, because here's what the Federal Reserve watches. They control that rate over there. It's 3.5 to 3.75. That's the federal funds rate. All that is interbank lending. If you're one bank and need money to kind of be solvent, you can lend money at that rate over through there. So that's basically the only thing that controls. But here's what they focus in on. They focus in on inflation. This is the number they want it to. It's almost at 3%. Probably the next reading, once we get this oil debacle coming through, this is going to go over 3%. So the Fed's not going to do anything. But now they're watching this and this. So we have the unemployment number. It's at 4.4, kind of just ticked up just a little bit recently. But we had ADP payroll numbers coming in this morning. And yeah, I heard crickets too. So I'm going to give you that number here in a minute. I don't really think any market reactions are to that. That's really only information we have coming out today. But then we have the GDP. That number was 4.4. Then it got revised to 1.7. Now we're down to 0.7. So GDP is looking pretty dismal right now. But let me give you some good news if you're watching this video. Let's get over to the bond market. The bond market, I didn't mean to show you that. The bond market's up 13 ticks today. What does that mean? Okay, all you have to understand is that number up through there. If it's green, that's good. The bigger the number, the bigger the adjustment. So here's what we're looking at. If that is up 13 ticks, that means mortgage rates are probably going to come down about 0.05 maybe. Well, let's look at a two-day chart right there here.